We're putting the focus on the aviation sector today throughout our programming. We're looking at some of the challenges and opportunities the sector is facing. So joining me in the studio to break down the dynamics at play in the low-cost airline industry is Nico Bezuidenhout, CEO of budget carrier Mango. Morning, Nico.
Good morning.
Fascinating industry, the aircraft industry, because it's huge investments. And on the other hand, you run the risk of having a whole lot of inventory that you can't get rid of in the form of empty seats. So it's big calls you've got to make, big long-term investments, but you're also a victim of currencies, of fuel prices, and so on. So where's the industry today, and particularly your part of it, the low cost, given global conditions, growth declining, and this euro crisis?
Yes, it's a tough industry, there's no doubt. Huge capital investment, volatile demand patterns, highly tied to global growth and economic situations. So with the euro crisis, high fuel prices, the industry is really tough. We've got differing demand growths, levels of demand growth. Africa is relatively flat with negative or at least break-even maybe forecast for the next 12 months. So in these conditions, it's important to differentiate yourself, make sure that you're cost effective, and keep on delivering in what the customers, the flying public, want.
How do you do that? Because price is an issue, but it's also reliability. Obviously, you have to be perceived as safe. That's non-negotiable for that industry. Safety
is definitely a given. I think then the other two components of where you can differentiate yourself, or three components, is the level of guest service or customer service that you offer.
Of course, the paradox there is if the perception of low cost means low service.
Yes, and that's an unfair and incorrect assumption or correlation is drawn. In the South African market, for example, Mango has been traditionally been the leader in terms of things like, for example, on-time performance. As a low-cost carrier, we're the only carrier in Africa to provide consumers with onboard internet access, for example. So cost-effective does not necessarily mean cheap and nasty.
Well, we've got Kalula buying 7 new 737-800 Boeings. Now, that's a big investment. That's one of your competitors. Now, they're coming into operation before the end of the year. You see that happening. You've got to do something similar.
I think that with the oil prices where they sit, it was a logical step for the competitor to take. Mango has since inception operated on 737-800 aircraft. These aircraft are fuel efficient, and therefore you have to simply operate fuel efficient aircraft when you have fuel pricing or oil pricing sitting at $105, $110. So it was a logical outcome. Mango has been operating those aircraft for the last 6 years, as I've said. We've just added our 6th unit 2 weeks ago to our fleet. So it's a good bet.
Mango, it's part of SAA, and your competitors have said it's not fair. You know, there's back office stuff, there's all kinds of advantages that you have in that market because they have to stand on their own, but you don't.
I think that Mango is a complete separate legal entity from that of SAA, and ownership structure and operational reality is two fundamentally different things. We operate totally at arm's length, independent board of directors, different systems, processes, and a different service proposition into the market.
What about the money, though? Is there subsidy, cross-subsidization?
No, I think that we operate in a legislative framework that prevents that. We have never turned to the shareholder for a subsidization or recapitalization of any form.
What about the African continent? Because there's, I mean, SAA, which is in the same stable, let's put it that way, given what you've just said. SAA is deliberately saying there's certain African routes we want to go into. Now, obviously, low-cost airlines in Africa, the long haul to Australia or to the United States is not as much of an issue, so it's easier to sit in a, shall we say, a budget airline cabin. So what are your plans for low cost and high value in Africa?
Look, Africa is definitely a growth market of the future. Admittedly, it comes from a low base, but low-cost aviation or affordable air transportation is a key economic enabler. And from that standpoint, there's a bit of a symbiotic type of situation between the economies of Africa as well as the growth of aviation. So from a Mango standpoint, we do see ample opportunity. We've obtained route rights to places like, for example, Mauritius, and are applying for other route rights. We do operate in a highly regulated environment in the African context. It's not an open market from the standpoint of where you choose to fly to, but it's definitely a growth market for us in the future.
What about the infrastructure to support it? Now I'm asking that question in two ways. The one is, when I look at how much my ticket costs, I think if you look at hired cars and budget airlines, the value you get and what you get a trip to Cape Town or whatever is huge, whatever airline you're on. Then there's this big tax that the airports charge, and you say that as a proportion of the total product that you're buying is huge. One can't think of any other industry where there's that huge tax. So that's the first question. Okay, some of the airports are very good. In the rest of Africa, is it similar? Are you having huge taxation to fund their infrastructure growth?
I think that, yes, you are right, and it's a bit of a conundrum, especially as a low-cost carrier, because we see anything that pushes up the cost of air travel as negative to the industry. Having said that, in South Africa we do benefit from world-class airport infrastructure, and unfortunately we also do pay high rates. Airport charges in the rest of Africa are slightly lower, but then again the quality of infrastructure is lower. So from a low-cost carrier, you struggle with, for example, operating hours of airports in Africa, the level of security in terms of runway protection and the like. But there's a concerted effort amongst African carriers and aviation participants, including the infrastructure providers, to improve the situation in Africa.
I read the other day that SAA had given up one of its historically booked terminals at Heathrow. Apparently they had 3, and to get access to these things is huge. I suppose they must have sold it. With the growth of the economies in Africa, it's important to get in first if you've got limited access in infrastructure terms.
Yes, I do think so. And it's also for us as a low-cost carrier important to get into the market to start the stimulation effect and therefore grow the market. I do not foresee infrastructure restrictions in the next decade, 2 decades, in terms of landing slots and the like in the African context. That would be a great problem to deal with actually when we get there.
What sort of growth are you looking at or not in the next couple of years?
It very much differs between full service carriers and low-cost carriers. The low-cost end of the market will very likely continue to grow at 5 to 10% per annum. The premium side of the market is slower in its recovery and will probably show a growth closer to GDP on the African continent.